Welcome back to Face the Nation, and we continue our conversation now with former Trump economic advisor Gary Cohn. Gary, I want to pick up on where we just left off. In terms of stopping the bleeding that continues to be happening for some of these mid-sized banks like First Republic, is there a white knight? Does this only end when one of the big banks buys it up?
Margaret, most likely that will be the scenario. At the end of the day, the banks that are most qualified and have the most secure and soundest balance sheets that can afford to absorb some of these larger regional banks are the largest banks in America, which in an ironic way is the last thing that the regulatory community and Congress wants to see. But that probably will be the likely outcome.
There were reports that Warren Buffett, the legendary investor, has been talking to the Biden administration. Is that a way around that?
You know, it could be, but then Warren Buffett would become a bank holding company, and the restrictions on bank holding companies are fairly dramatic, and he would have to understand what that meant to his everyday core business, what he could do, what he couldn't do, and all the regulations and restrictions he would have upon himself after having become a bank holding company. It's not a simple decision.
Well, part of that decision has to also be, you know, is this going to hurt me in the long term? Larry Fink, who he runs the world's largest asset manager, told investors a few days ago, we could see more seizures and shutdowns coming. He said you could see something like the saving and loans crisis in the 80s and the 90s, where thousands of lenders just disappeared. Is he overstating it?
No, I think Larry's not overstating it. This is a crisis of confidence right now, to some extent. Bank runs are a crisis of confidence. The government has put in place a backstop for the two banks that we know are in trouble. Mm-hmm. The banking industry itself is trying to help a third bank by putting deposits into that bank. So we know what the remedy is for three banks, but there are thousands of small and regional banks in the United States. This usually just doesn't stop after two. We're going to continue to go. And investors and depositors will evaluate each bank, and one by one, they will start saying, what is the next bank that is least secure that I most likely do not want to have my deposits in?
And you know trading world well, that moves like this. It moves so fast. It takes a lot longer for Congress to act or do anything.
Look, these bank runs, because of the way they've been digitized and the fact that everyone has online banking or on telephone banking, these bank runs now can happen in minutes. You know, it's not like you're going to the bank anymore and you're standing in line at the front door and you can slow it down. You can't slow down digital banking.
So you have called in an op-ed for common sense regulation. You do want Congress to act, you say, with smaller bank oversight. You say the role of the board of directors should be evaluated because of what happened at SVB. Apparently, they didn't have a lot of experience on it. That the $250,000 limit on deposit insurance should be raised. Mm-hmm. Elizabeth Warren hit the same numbers you did, $2, $5, and $10 million.
Yep.
Doesn't that trickle down to customers and just make their costs go up if that kind of insurance extension happens?
Well, you're right. Former chairman of the SEC, Jay Clayton, and myself wrote an op-ed where we talked about, look, you have to have a board that has qualifications. They have to understand banking. How can a board oversee a bank that they don't have qualifications? And yes, expand deposit insurance, but you could have tiered pricing. It could be one pricing for deposits below $250,000, and then you could have tiered pricing. As your deposits go up and you want them insured, it will be more expensive to insure those deposits. But the key here is, Margaret, and this is very important, we need to keep deposits in the U.S. banking system. It's imperative that we keep deposits in the U.S. banking system because that's how we grow our economy, by allowing banks to re-lend those deposits into consumers to consume, to buy houses, to buy cars, to go to college.
Right.
There is an alternative. There's a very important alternative that we talked about in our op-ed. The alternative is U.S. Treasury bonds or U.S. Treasury bills. They pay a higher rate and they have a tax advantage to them. The horrible outcome would be if people take their money out of banks in the United States and put them into U.S. Treasury obligations. That would have a dramatic impact on slowing down economic growth and slowing down the economy.
The Federal Reserve meets this week. They control interest rates. Given the anxiety that's happening, can Jerome Powell, the chairman of the Federal Reserve, go ahead with the hike he has planned, or are things so bad out there that he can't do what the market expects?
Look, he's in a tough spot. We still have inflation. We're starting to see some positive signs that inflation's coming down. Inflation hurts consumers as well. I think Jerome Powell is going to need to raise rates 25 basis points this week. And then I think in his statement, in his press conference, he's going to need to talk about how the Fed understands the cumulative effect, the lags effects of interest rates, and that they're going to be acutely aware of watching for the cumulative effects, the lags effects, and they're going to be very data dependent as they move forward. And I think he'll leave himself a lot of room in the forward meetings to do whatever they need to do, which may be pause, maybe cut, or it may be increase, depending on how inflation's going in the United States.
Because all of this will have an impact on the broader economy. Ultimately.
All of it. Both the banking side as well as what the Fed does in policy.
And we know there's political ramifications too. That's why we pull all the threads together here, Gary. Thank you for your analysis. We'll be right back.